Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 19 to 21 as short-term support, and that's an area where responsive buyers were active, and at this point heading into the open, buyers continue to be in control. So if we look at ES and NQ, we can see that both markets have been bouncing in a range and are coiling for a directional move. The only red flag in this market, as far as the upside is concerned, is the negative divergence setting up in the Russell, but even that can resolve to the upside, and TF can pretty easily put in a catch-up move to the upside. So heading into the open today, as long as ES is holding above 19 quarter to 21 quarter, and especially 22.75 to 23 quarter, the pre-market support zone, the buy side can maintain firm control, and there is potential for a upside breakout above 26 to 28. So as long as we're not seeing any glaring warning signs, like the Russell just completely breaking down below the recent range, below the 1150, and the other markets like Nasdaq are not completely breaking down, as long as there's not some very clear and obvious sign of weakness, the focus is going to remain on the upside. The focus is going to remain on long setups, and on the upside, if we can get a breakout above 26 to 28, then the first area of resistance is 35.5 to 38.5. So that would be the first upside objective, upside target. Responsive sellers can be active on first test of that zone, especially towards the upper edge of initial resistance. And then beyond that, we have resistance at 41.75 to 44 quarter, which is a higher probability spot for responsive sellers to be active. So in the event that there is strong momentum and we end up going through initial resistance, then 41.75 to 44 quarter is still an area where it can be a decent hurdle for the market. And first time up, the expectation is for a sell side to defend 41.75 to 44 quarter. Now, on the downside, if we cannot really get any upside momentum and we can't really get any broader market strength, and the Russell does start to fail, then a break below 19 quarter, 21 quarter would bring that bottom edge of the recent 2 to 3 day balance into play at 1175 to 1475. And in the event that the Russell is completely breaking down below the 1148.7 to 1151 lows, in that case, we could see some more sell side activity in the S&P, but again, that is the lower probability scenario. Until we see some very clear and obvious signs that buyers are completely absent at initial support and pre-market support, we want to maintain that focus on the long side, because right now the larger time frame bias is clearly bullish, and the Russell, which is the only red flag in this entire picture, again can put in that catch-up move to the upside. And for the Russell, ideally, we want to see a breakout above 1165 half to 1167 half. That is the immediate resistance area in TF. So if TF can put in a breakout above 65 half to 67 half and start catching up, then we can really see some acceleration in the S&P and Nasdaq as well. So far, the Russell's been weighing down on these other markets, and the markets have just been kind of in this consolidation and balancing phase. But eventually, we are going to get a directional break. It doesn't always have to be on the day that you expect it, but the market is setting up for a directional move outside of this recent range. The larger time frame bias is bullish, so by default, you have to give edge to buyers and anticipate a upside breakout rather than a complete failure. But that doesn't mean that you can't be prepared for the failure scenario. It's just that the upside one is in play until we see some very clear-cut signs that buyers are absent here, and we start seeing some better weakness in the Russell and across the board. So until then, we'll keep our focus on the long side. The primary scenario is going to be an upside breakout, targeting 35 half to 38 half, and potentially 41.75 to 44 quarter. And then the secondary scenario, which is a lower probability scenario, would be a break below initial support for a move into 1175 to 1475. Buy side can still defend that area, first test, and then if that zone doesn't hold, then we'll deal with the zones below at 0575 to 0775 and 2000 to 2002, which would still be an area where responsive buyers can be active on first test. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control here above initial support and pre-market support, and we'll take it from there.